Welcome back, everyone. This week, we'll be discussing Rubicon Organics, a micro-cap cannabis Canadian company, the trifecta of risk appetite. On a side note, it's interesting, recent development is that seemingly Todd Harrison, anybody familiar with this part of this industry, seemingly has been told by Stripe, the payment processor of Substack, that they will no longer allow payments to his Substack as a consequence of being a cannabis-related company. And anybody unfamiliar with his Substack should know that I don't want to say merely because I don't want to discount it, but he discusses what's happening on an industry-wide level and companies. He discusses companies and investing in companies and what different lawmakers are doing and stuff. But seemingly that is a tangentially associated cannabis-related company by extension, which is interesting. It's like, so, like, what's the implications of that? Anybody covering the news on that topic is at risk of having their payments stopped? I only say this because not that I have any paid subscribers, but I cover stuff. So his entire Substack is related to that topic, and only a portion of mine is. But I wonder, I guess that's still enough, because even if 1% of what you discuss is discussing that topic, then seemingly you're a suspect. And that's interesting. And we're going to get into that later on into this video about all the crazy, stupid stuff. Because you could say, for instance, Canada, which this company is part of, that Canada federally legalized it and that America should do the same, and fair enough. But the thoughts that we have when we hear a phrase like federally legalized doesn't mean that it has the same freedoms as other federally legalized things, such as alcohol or tobacco. But like I said, we'll get into that in a moment. So with that out of the way, let's get into this. How I got here and what I'm seeing. The recent shakeup and revamping of the TOKE ETF, ticker symbol TOKE, naturally caused me to look into its holdings. Instead of holding the run-of-the-mill companies, it's taking more of a value-based approach. As such, I was interested in seeing what its holdings were. In doing so, I came across Rubicon Organics. You can read more on this over at the Mindset Value page, where he goes to explain, as a manager of that fund or helping construct the portfolio, what he's looking for and how he's thinking about it. Go click on the link. It's also of relevance that the YOLO ETF, ticker symbol YOLO, included Rubicon Organics in their holdings back in early May 2024. As a consequence of this, I thought it would be worthwhile to take a deeper look into Rubicon, and today's piece is me doing just that. But who is Rubicon? They're a micro-cap Canadian cannabis company based in British Columbia, Canada, that's predominantly involved in the premium segment of the market. And yes, they're up to date on their taxes. And for all of those who care about insider ownership, Rubicon has that covered too, with management and insiders owning 43% of the shares. Arithmetic. A few noteworthy developments are occurring on the operational side of things in their business. A lot of companies, both in the US and Canada, have seen stagnant growth over the last 12 months. Although Rubicon grew revenues 13% in 2023 on a trailing 12-month basis, they're growing at roughly 2.5%. But I don't see that continuing. I see revenue growth in the next 12 months coming from roughly 20. Now remember, 12 months would put us midpoint 2025. So I see that coming from roughly a 20% growth from entering the vape segment, 7 to 10% growth from added bench space in their grow house, and 1,000 kilos procured from their contract growing partnership. And number 4, premium market anticipated to grow at 300 million Canadian dollars in the next 3 years. Yes, a distasteful TAM figure, don't worry, we'll convert it to a SOM figure later. The source of these reasons are below with accompanying quotes. The Q1 2024 conference call in regards to their vape products, quote, "We estimate that in 2025 this could generate growth over 20% on our 2023 net revenue," end quote. The Q4 2024 conference call, quote, "I'm pleased to formally announce Rubicon's launch into the vape category with our plans to launch 1964 full spectrum extract resin vapes in Q2 of 2024, end quote. Then we have Q4 2024 conference call, quote, "In order to grow our yield, we installed tables in 50% of the Delta facility that we did not yet have them, and that was completed in Q4 2023. We expect these tables will improve plant quality and increase capacity by up to 10% in 2024, end quote. Q4 2024 conference call. Our goal is to procure around 1,000 kilos of high-quality biomass from contract growers in 2024 and expand beyond that in the following years, end quote. And finally, Q4 2023 conference call, quote, "Trends and data indicate that over the next 3 years, the premium cannabis market will grow by over 300 million, end quote. Now you have to remember this is a Canadian company and many of the figures being discussed today are Canadian dollars. So do keep that in mind because that does make a meaningful difference. For sake of argument, let's take management word on all of this. Yes, a direct contradictions of the warnings of nullius in verba. Let's run through these 4 points to better elucidate them. The vape growth of 20% is pretty self-evident. It's currently an $800 million market that they plan on entering. It only makes sense that they would capture some percentage of that. Revenue in 2023 was $40.1 million, which would imply $8 million revenue growth in 2025. To keep that in perspective, that's 1% of the overall vape market. That seems reasonably attainable. If we presume a 1-to-1 correlation, I know that's a dangerous thing to do, but if we do, correlation between bench space and revenue, then we can presume a direct corollary between expansion and revenue expansion, although scales of economy would suggest it should be cheaper and aid in margins. The added bench space should contribute $2.8 million on 7% growth over fiscal year 2023 revenue. In this video, link in the article, the CEO outlined the following. Sorry, I forgot to timestamp it. In regard to pricing, she said in Ontario, before I say this, you have to know that they have a few segment lines. The Simply Bare is the super premium, and then the 1964 is the premium, and then the Homestead is the trim and shake and whatever else that didn't get to go into the super premium and premium categories. And you'll see this in the pricing. So she said in this interview that the Simply Bare ounce bag is $240, the 1964 product is $190, and their Homestead sells for $160. If I average those together, that's about $200 an ounce, even though I believe it's like $196, but we'll call it $200 because we're just trying to be directionally correct here. So 1,000 kilos is equal to 2,205 pounds. So $200 an ounce, and you multiply that by 16, and then that by 2,205, and then you get altogether this grow house of 1,000 kilos should generate roughly $7 million. Now, they're not going to keep all those revenues, I wouldn't think, because, well, they might recognize all those revenues and then have to pay out of pocket to the contract growers. But nonetheless, if they manage to do that, and if people only care about revenue, then they'll recognize the $7 million altogether. Or put differently, that in and of itself would be a 17.5% growth over fiscal year 2023 revenue. As of Q1 2024, they have 6.9% of the premium market share. Presuming that stays the same, that would provide them with $20.7 million of revenue in the next 3 years as a consequence of the premium cannabis market expanding. Annualized, that would be $6.9 million a year, or 17.25% growth over fiscal year 2023 numbers. Altogether, that's 20% plus 7% plus 17.5% plus 17.25%. So that's roughly 61.75% growth. This would be end of year 2025 compared to end of year 2023, which is to say I'm looking out 18 months. It appears I'm able to buy this growth at, and now it's cheaper by the way, from when I did buy the growth, it appears that I'm able to buy this growth at 0.7 times EV to sales. Most recently, in the past few days, it dropped down to 0.5 times EV to sales, or 0.55 times EV to sales. On an adjusted EBITDA basis, these are their last 4 quarters. I'll just run through them right quick because I'm saying a lot of numbers in this. Last 4 quarters was negative $400,000, then 1.3 million, 1.1 million, and 1.8 million. So I'm able to buy Rubicon at a 6.68 EV to adjusted EBITDA multiple. And like I said, from the time I wrote this to the price it was trading at afterwards, you were able to buy it like 5 times. One might also think that they'll generate additional revenue from expanding their product lines and SKUs beyond the aforementioned vape category. And here's just, I'm not going to read all this. Here's just some things, developments subsequent to March 31st, their Q1 report. And this isn't unique to them. Practically everyone is doing this, so how likely is any of this to manifest? I don't know. But it's priced as though none of it's going to happen. And even if it all happened, I'm not too confident how much of it will be reflected in the stock price. By nature, I'm a devil's advocate. The amount of poor sentiment in regard to the Canadian cannabis market is immense. As such, I thought I'd take the time to bring your attention to something that has the potential to offer optimism. There are many finer details that I could discuss and contrapoints I could offer to better temper these projections, but that is beyond the scope of this article. The information I've provided today should be enough to pique your interest and cause you to set out to do some investigative work and familiarize yourself with the company further. If it wasn't, then there's no real reason to discuss the finer details. Now is there? So as I said, there's other things to talk about, but I'm not going to talk about them. I've written, as anybody who's even remotely familiar with my work knows, I say a lot of words, so I'm trying to say less words. And as a consequence, there's a whole lot I left out. No massive red flags or anything like that. I would have included those. So, yeah. If this kind of growth interests you, and knowing that there are positive cash flow from operations and positive adjusted EBITDA and such matters, then have a look. If not, I guess one concern is that they do have, what is it? Like a 7.5? Oh boy, 7.58 million. This is unprofessional of me. I apologize. They do have that coming up, money they owe, and they don't have the cash to pay for it. So they plan on refinancing that. Now, if that doesn't happen, then oh boy. But with Canada more recently cutting interest rates, this is one of the things I left out, was a whole segment on the Canadian economy and how things were looking last year and how seemingly they're bouncing back to some extent this year and how they cut interest rates recently and the implications of that. See what happens. So, I'm not here to convince you or anything of anything. This industry at large is FUBAR. How about, there's a lot of links here, how about this podcast about the New York market or the social equity efforts that are being subverted? Taxes not being paid, making an unfair playing field for law-abiding businesses. Seemingly, THC beverages might not be getting tested for listeria and botulism. Or how about adopting food standards for testing cannabis for mold? Here's a good introduction to PCR versus plate assay testing. Corruption, pesticides and things. I just read another article today about pesticides being discovered in California. There's an insurmountable number of data points on how labs are being inconsistent and even corrupt, inflating THC, or just straight up not testing for things, like mold. Or they test for mold in a way that minimizes the detection of mold. I'm sure the labs would say in a plausible, rhetorical smokescreen and ostensible fashion, they're testing stuff and are trying their best. Guess what? I bet they could do better if they got shut down, when they didn't do better. Seemingly, the extortionate high taxes aren't enough to get standardized regulation and enforcement, whether that be facility inspections or people shutting down illegal stores. Or it's a principal agent bust out and the politicians are funneling the money to more self-serving areas. On and on this drama can go. The reason it's relevant is because if your law-abiding company that you're invested in is doing everything right, they're having to maintain solvency and relevancy while all the degenerates have an edge, at least in the short term. But so far, the short term is half a decade, at least, over half a decade now. There aren't many who are that well capitalized to endure for that long. Take, for instance, the use of CRCs, color remediation columns. Many concentrate and distillate manufacturers use this to change the appearance of distillate from a darker brown to a more golden hue in order to deceive their customer of the quality, because they know that the color is used as a proxy for quality. Of course, no one is using premium flower as a source material for low-quality distillates, but still, people don't think like that. In evolutionary terms, this is mimicry and is cheap signaling. It's disingenuous, dishonest, and yet again hurts more premium brands. Sure, the customers will eventually figure it out, but what kind of argument is that? Look at this BS. It was only a year ago that British Columbia Canadian stores could finally have transparent windows. I started this video talking about just because something's federally legalized doesn't mean, well, all that you might think it would mean. That's pretty damn low on the totem pole of freedoms that federally legal businesses are allowed to have. This industry reminds me of the Solzhenitsyn quote. We know that they are lying. They know they are lying. They even know that we know they are lying. We also know that they know we know they are lying. 2. They, of course, know that we certainly know they know we know they are lying too as well, but they are still lying. In our country, the lie has become not just a moral category, but the pillar industry of this country. End quote. The industry has been one major catastrophe on practically every level of analysis. It's one major headache, and that's why many don't invest. Or it's why they seek out the safer Tier 1 names. But as someone I know once said, most people are retarded. That's both the tragedy and opportunity of life. I've spent tens of thousands of words discussing my thoughts via numerous articles I've written in regards to the woeful ineptness, negligence, Dunning-Krugerness, and pathology of this industry and its participants. I needn't elaborate any further here. So why invest in what amounts in aggregate to be a retarded tragedy? Because the potential embedded and intrinsic opportunity that lies within it. That's why. The opportunity, for the most part, has been to the downside in the last half decade. But as of 2023, it appeared to me that the bottom was forming. As such, in 2024, I have been accumulating shares in names which I think could do well in the future. It's only in the last year that the future and past are now indistinguishable to most. The trailing 12-month and next 12-month pricing are the same. In all fairness, this could be said about numerous companies in the space. Either I'm wrong or there's a lot of people off sides and not paying attention. I'm reminded of the quote, "The most exciting returns are to be had from an asset class where those who know it best love it least because they have been hurt the most." Now, what am I talking about when I said they're trading at the same? Well, if you look at this chart of Rubicon, you'll see that the purple is the next 12 months and the blue is the last 12 months. So normally the next 12 months is expecting revenue or earnings growth, or in this case, sales growth, revenue growth to enterprise value, and therefore it should be trading on a cheaper next 12 months than the last 12 months. And historically, that's been the case. And then you see in the past couple of months, they're now pretty much the same. Or they are the same. And if you expand this chart, you can see, well, if you look closer at the chart, you can see that the difference shrinks. Like there was a healthy gap. You can see the gap between the purple and the blue on the left side of this chart. And then over time, more so in the last year, you can see that that gap narrowed. Now you could say in part that's because the revenue growth has been slowing, going from 100% to 50% to 25%. Theoretical numbers, but you get the point. And now it's as though it's the same. But I just laid out to you, what was it? 60% growth in the next, let's call it 24 months. Okay, annualized, we call that 30% growth. Fine, cut that in half. Go from 60% growth in the next 2 years instead of 18 months or 12 months, and then make that annualized, so that'd be 30%, and then say, well, I'm just being too optimistic, so cut that in half, so then that's 15%. Well, it's still growing. Now, you could say at that point, 15% might not be enough to make one be 0.6 times EV to sales and the other 0.7 times EV to sales, even though that's not true. But, and then the one analyst covering this, I don't know, they're behind a, email wall or a paywall or private wall. It's just something I'm not really interested in tracking it down. But their price target is, it's like $1.40 something. So I think it's about 300-400% upside. Now this is in the ROMJ on the venture exchange, not the over-the-counter one. So the one analyst out there seemingly thinks there's 400% upside, but how long have they thought that? I don't know. I don't know any of the details. And it's just interesting that no more growth is being priced in. Now, that's either because there is no more growth, really, or because people's just given up. They're despondent. They've moved on. Plus, it's a micro cap. But even as a micro cap, like I said, there was a gap between the blue and the purple for a couple of years, even as a micro cap. So, make it what you will. On a final note, the stock is even cheaper than when I started writing this. It's now trading at an EV to sales of 0.55 times. I bought my shares at 0.75 times. And I have limit orders in for lower, which I've not got hit yet. You'll note that in the last year, it has traded between 0.5 times and 0.8 times EV to sales, which might make this dip a good time for me to add to my position. Disclaimer, I'm long Rubicon Organics. That is all. Thank you for watching. Food for thought. And yet again, I try not to, or not yet again, but I haven't said this yet. I try not to get caught up in look at all these amazing opportunities in these micro cap companies and look at this third world exchange micro cap company that's trading at a 50% discount to its US listed peers and blah, blah, blah. People do that stuff with like Tidewater. I'm not interested in that. What I'm interested in is trying to get some exposure to this industry in companies that I don't think have morons for management. And you gotta be careful saying that because that's a placeholder word. Because you could say, well, is a multimillionaire who's been able to siphon millions of dollars off of CEO, board of directors, management fees, and dilute the hell out of the shareholders while dumping all of their shares or many of their shares? That's not too moronic now, is it? So I mean moronic from a shareholder perspective and from a, return on capital perspective. From adjusting to the market conditions by not overexpanding. For instance, Rubicon was planning to go international a year or so ago, and they decided not to because it seemed cost prohibitive and that they should focus on their initial market. Good decision, bad decision, I don't know, but management decisions like that, they kind of expand and then they pull back and then they grow. They never have to right size because they stay right size. Grown Rogue is a beautiful example of that. While everybody else was chasing pipe dreams in the state expansion story, they didn't. They honed their skills, they developed themselves, and then when they were ready and had a proper base, they then expanded slowly and steadily. And that's what Grown Rogue's doing. And it's hard to find competent management teams in this industry in regard to that sort of mentality that I want my manager to have. I just read an article that I've not published on my Twitter yet, but I want to, and maybe I'll do it after I make this video. I can't think of his name eludes me, but the Poseidon Fund, the guy, he was quoted in this article, and he said governance, governance, governance. So he was talking about the state of California and how practically none of the companies can do well, but like Stizzy is doing well, but practically no one, for all intents and purposes, is doing well. And he said governance, 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 and well, that's true. In part. I mean, there's other factors. If the environment was more conducive, both from a federal level, but also even a state level, like the number of stores there are versus the grow facilities versus the excise tax now going from 15% to 19%. Talk about a bust out. That won't happen, I think, till 2025, though. And things like this. Like, yes, if the environment was more conducive to business in this industry, then that would help masquerade some of the poor decisions that management teams have made and would give them more wiggle room. And fair enough. But there's clearly difference in government or governance between certain companies and others. Green Thumb is always used as the bellwether for competent management in the tier 1 space, and then other missteps and misdeeds that other companies have made. And you can say, well, what's the difference? They're both operating in the same environment. And the answer is governance. That's the answer. So that's what I'm looking for. And sadly, well, not sadly, I don't care for it. I don't really care to go into microcap land. It's dangerous with its own unique particularities and such. But nonetheless, that's why I'm in microcap land. I am not a microcap kind of guy. So don't expect much of that from me. There's this name. There's another name. Anybody who reads my weekly performance reports. And it's interesting. That's all. And since there's less attention, less eyeballs, I don't hear people talking about Rubicon. I don't hear people. Oh, there's just a simply solventless Christina Lake company. I think ticker symbol for the over-the-counter is CLCFF. It's like all these little micro-cap companies that no one's talking about. And why aren't anyone talking about them? Aren't they part of the industry? Aren't they doing things? Aren't they blah, 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 blah? But somehow they get looked over. Isn't that funny? And you realize that when most people talk about this industry, they talk about, 5% of the industry? 10% of the industry? And then we as listeners who aren't perspicacious think they're talking about the entire industry. We confuse a particular segment and subsector of the industry, of its participants, as the industry, but that's just not true. And then it's up to management's team to get promotional and go on these roadshow tours and do interviews and bring attention to their name and this and that. And it's like, it's interesting. That's all. So with that said, I'm done here. Thank you for watching, and until next time.